founder or an entrepreneur. You wanna take your company value to 300 million, we gon' show you how to do it. But we got the roadmap, the aspirations. We'll give you a game plan and strategies. Seize control of your company's destiny today by tuning in to Private Capital Mastery. Let's start the show.
This is the Private Capital Mastery Podcast, and I'm your host, Brian Franco, and I welcome you back to part 2 of this vital 6-part series. Today, I'll continue to delve into the 6 key pillars of our firm's approach to engaging with investors and buyers in the marketplace. In our last episode, we discussed the importance and need to measure your company's enterprise value and assess its ability to be transferred to buyers and investors. But in this episode, I will show you how to design and architect your dream deal on your terms and provide you with a cheat code on how to access massive valuations that investors want to pay for. And as you may already know, I'm the founder and CEO of Meritage Partners for the last 20 years. And during that time, our firm has facilitated over $2 billion of capital for our clients. And I'm thrilled to have this outlet to share insights from my playbook. So let's dive in. As we discussed the importance of strategic architecture in business planning from inception to exit, successful businesses are designed with the end in mind. So let's explore the principles of strategic design and how they shape the trajectory of your company. Whether you're aiming for a merger or an acquisition, an IPO or a legacy business, we'll uncover the essential strategies for architecting your business for a sustainable future. So now let's put our deal architect hats on so we can explore the art of crafting exit strategies for businesses and uncover the essential principles of strategic design that shape the trajectory of your company. So I broke this down into a few segments. In this segment 1, we're going to talk about the importance of strategic architecture. In this context of business exit planning, we're referring to the deliberate and systematic design of a company's structure, its operations, and strategy with the end goal of achieving a successful exit. It involves creating a framework that aligns the company's short-term actions with its long-term objectives, ensuring that every aspect of the business is strategically positioned to maximize value upon exit. So here's a deeper look. In the long-term vision that we talked about, that architecture begins with defining a long-term vision for the business, including the desired exit outcome. That's different for everyone, but it involves setting specific goals, your objectives for this exit. And for example, such as achieving a certain valuation, or maybe it's a certain date in the future, but we need to find that out so that we could then position the business, go to the markets and find that right acquirer or investor and make sure that we're preserving the company's legacy. And then we're going to talk about here in number 2, the alignment of resources and capabilities. In this architecture planning, we're going to focus on aligning the company's resources, its capabilities, and organizational structure with that exit strategy in mind. This will include optimizing the business's products or service offerings, whichever your business is providing, and strengthening your market position and developing a key competencies that enhance its attractiveness to potential buyers or investors. So let's talk about market position and differentiation. Now, you worked hard to separate yourself, to rise above the crowd. And it's important that we're positioning the company effectively with its market segment and differentiating your business from your competitors. So this is exactly what's going to bring investors to the table. This is what's going to bring buyers to the table. And it involves identifying and capitalizing on unique selling propositions, building strong brand equity, and creating barriers to entry that enhance your company's value. Or, as we might say it, your company's perceived value by the buyers or investors in the marketplace. But we also have to be focused and mindful of risk management and contingency planning, because projections, plans don't always go on the schedule that we had intended it to be, and we don't always land on the destination in which we originally set out for. So we need to identify and mitigate potential risks in your business, because these uncertainties will definitely impact the exit process. This may involve developing contingency plans for various scenarios, such as market downturns. We've seen it, we've been there, we've done that. Or changes in regulations. So if some of you have done a SWOT analysis, what part of the assessment that we provide will do, we want to be able to see what those are and then navigate through and around them where we can. And of course, there's going to be unforeseen operational challenges. Not long ago, we were all faced with a shutdown of our economy and our society. Not all of us, not any of us really were prepared, but we had contingencies in place. And that's what helped a lot of companies, grow by 30%, some 100%. But then we have the financials, and they need to be optimized. So what do? So your company's financial performance and positioning your company for maximum valuation upon exit, it's not as simple as printing out a P&L. We need to design, implement, and improve KPIs to measure your profitability, to measure your cash flow management, and your financial reporting practices. Again, this is not just about the P&L and the balance sheet. We need to also focus and work on reducing your debt and enhancing the overall financial health to attract potential buyers and investors alike. So let's talk about your culture and how you're developing your talent, right? Because building a strong organizational culture and developing talent that aligns with the company's values and objectives, this includes fostering a culture of innovation, collaboration, and accountability, as well as investing in leaders and leadership development and succession planning to ensure continuity and stability of the business. Let's talk about stakeholder engagement. We need to approach all of the stakeholders involved with transparency. You cannot do this alone. So engaging with those stakeholders, and this will include employees at some point, customers and suppliers. Now that all doesn't have to be done up front, but at some point and in some stage of this process, there has to be messaging to those that are seeing what's happening when it comes to that exit plan and executing on that exit planning process. So this is going to this is going to include the communication with the company's strategic direction. What are you doing? Why are you doing this? How is it good for the employee? How is it good for the suppliers? How is it good for your customers? And involving those stakeholders in all of these decisions that you're making and addressing their concerns, because they will have concerns. And you have to realize too, in the interest of building trust, will only support you as you execute on the exit strategy. And again, I'll tell you, you can't do this alone. You need to involve your team. So overall, we need to understand your expectations so that we can carefully craft an exit plan that is about proactively designing the company's structure, its operations, and strategy to not only position it for a successful exit, but we also need to lay the groundwork to create a sustainable, long-term plan for the business, which is going to ensure the success and continuity of what you built. And I want to also talk about, as we roll into segment 2 here, we need to identify and prioritize business objectives and goals. There's going to be a lot. Where do you start? Where do you end? And this is going to come through dynamic conversations, looking at industry trends, and looking at the competitive position of your business. So this is going to be both internal looks and external looks. But building flexibility and adaptability into the business model to navigate uncertainties that we talked about, will only benefit you as you execute on this plan. And that's why we're saying to incorporate stakeholders' interests and expectations into this decision making, because we've seen deals stall. We've seen deals fall apart because not all stakeholders were behind the decision, or in some cases, not even involved in the decision at the early stages of this process. So let's go back at crafting this exit strategy. And we talked about that exit strategy may be, a merger, an acquisition, an IPO. It could be a succession plan. Whatever it is, we need to understand, and we need to understand clearly what all of those expectations are so that we could achieve and end up at the destination that we intend to reach. So evaluating your timing and readiness is key. If we're going to market, we need to understand what the market conditions are at that moment in time, right? And how's the business performing in that market? So there again, these contingency plans will always give you that peace of mind so that you can navigate through whatever economic cycle we're in and focus on the continuity of the business with those, what we'll call, those contingency plans that we're talking about. But let's look beyond the exit. What's next? What do you do, right? Because you've built this legacy. Hopefully it has sustainable success with whomever acquires it. But that really is going to be up to you today, because transitioning from exit planning to post-exit strategies are crucial as we're rounding out the sustainable success and the strategy related to that for your business. So we need to leverage the proceeds from exit transactions to fuel growth. We've used, innovative deal structures to do this. But there again, it really depends on what that org chart looks like, who's on your team, and you're going to have folks that are at different stages of their professional career. You'll have early stage folks, you'll have middle stage folks that are in the middle of their career, and you have some that are facing the horizon of retirement. And if you're planning an exit strategy in and around the time that everyone's looking to retire, remember, your people are your assets, part of your assets, a huge part of your assets. And without them, you're really risking the continuity of your business. So we need to be focused on investing in community engagement and corporate social responsibility in and around your business, but creating opportunities for future generations and other entrepreneurs and employees coming in to your organization. They need to be welcomed, and they need to understand that their job is as important to you as it is to them. And the reality is, buyers and investors do not want a situation where your employees are leaving, post-transaction. That's just detrimental. It's absolutely detrimental to the business. So if you are a business owner and you have not considered or begun crafting your exit, then you need to DM me now. This is your moment to take that first step to creating financial freedom. So I hope you enjoyed the 6-part series, and I encourage you to join us next week, because next week we're going to learn how to enhance your enterprise value. I'm your host, Brian Franco, and I thank you for being part of the Private Capital Mastery podcast and community.